Budget headquarters right here in ET9. What a choppy trade it's turning out to be for the equity markets. If we can just bring up the Nifty intraday graph, you will get a better sense of what I'm talking about. Sure enough, it's a Saturday, so volumes are going to be lower. But I think today's FI and DI print is going to be extremely crucial and very interesting a reveal. Having said that, look at how we actually started off in trade. If we can just get back to the Nifty chart first, because we started off a little bit soft. Post the budget speech is where the action actually began, where you saw that big drop down, a little bit of a spike up, again a drop, and again we're seeing a little bit of a recovery play out. We're finally trying to bob our head above. Now, what's leading the recovery? It's just purely consumption all the way. If you were to take a look at the top five names on the Nifty in terms of the gainers, there's Trent right on top, there's Maruti, there's M&M, there's Britannia, there's Unilever. It's all the consumption plays which are actually holding out. But what's not looking good is the old economy sectors. Look at what's happening to the manufacturing plays, infrastructure plays. L&T is a big drag down. Insurance, of course, is a big sulker today. And private banks as well are not doing anything. They're still sulking in trade and continue to lie pretty much at the session lows. And it's quite evident in the way the Nifty Bank has performed today and completely bereft of the move on the Nifty, which is clearly seeing a bit of a tug of war, if you will, between what's happening within FMCG on one hand, the consumption plays on one hand, and what's happening with the rest of the market. But Kunal is here with us. Let's analyze what the charts are reading. Kunal, firstly, how are the volumes today?
The volumes are pretty much on the higher side.
Are they?
Yeah, which is a normal course of action, Aisha, because on the budget day, especially during the budget, when that heat of volatility comes into the markets, that's where the volumes they tend to rise. As you can see, that the volumes just after that 11:28, 11:30 mark, when the budget ended, you saw a sudden spike in volumes. That's a normal course of market action. What matters over here is that we've recovered from the day's low. So after being down almost 200 to 50 points on the Nifty, we are closing almost flattish on the index. That I believe is a very strong sign.
But tell me, what's this knee-jerk reaction, if you will, on the entire consumption and FMCG space telling you? Your Trend, M&M, Maruti, Prestige, Godrej Consumer, these are all the names which are holding up. And of course, the FMCG plays like a Britannia, etc. too.
So this could be very positive for the entire sector because, we were discussing this earlier that many of these FMCG stocks, Trent also, I think in that, basket.
Avenue, Zomato, Swiggy.
All of these stocks were beaten down 30-40% in, some of them in the last 1 month, some of them in the last 4 months. This could be a very strong sign that we are looking at the end of that corrective cycle. So it may not be a V-shaped recovery further, but at least it indicates that this is an end of a bearish cycle.
So selling is done, you're saying?
Selling is done.
Yeah, that's great. Okay, and now to the beleaguer end. Banks, what are they up to?
Yeah, I think some bit of selling which has come back into the private sector banks, because I think my sense was that the markets were expecting that maybe something could come out in terms of the banking reforms, but maybe some bit of disappointment. But I would still believe that we are still quite good on the banking stocks, just 150 points down for the bank index, and that too recovery led by more private sector banking stocks. I think that's a very strong sign that the market should recover.